Margin feels powerful. It's like borrowing muscle from your broker. You control a big position with small money. But remember, margin is not free. It is a loan with strict conditions. If you break those conditions, the broker can take your position away in seconds. Many traders treat margin as free money. They think, with 100,000 rupees, I can control 500,000 rupees. Great, but they forget margin is not theirs. It belongs to the broker, given temporarily. If losses reduce equity below safe levels, the broker issues a margin call.
Over 93% of traders lose money in the markets. Not because of the market, but because of their mindset. Hi, I'm GC Sharma, founder of Ghar Investor, former head of financial education at the National Stock Exchange. After 3 decades in the markets, I'm here to help you trade with discipline, not emotion. Welcome to Bounce Back Trader, India's free YouTube learning series for traders who want to bounce back with clarity and confidence.
If the trader doesn't add funds quickly, the broker will square off the position automatically. Example, Arjun trades Infosys futures. Margin required equals 150,000 rupees. He puts exactly 150,000 rupees. Infosys drops 3%. Loss equals 30,000 rupees. Margin left equals 120,000 rupees, right pointing arrow below requirement. Broker issues a margin call. Arjun doesn't respond. Broker closes his position at loss. This is the harsh reality of margin. 1. Initial margin. The money needed to open a trade. Without it, you can't enter. 2. Maintenance margin, the minimum required to keep the trade alive. 3. Span and exposure margins, India-specific span margin, risk-based margin calculated by NSE using volatility, price, and risk scenarios. Exposure margin, extra safety cushion added by exchange. Together, they protect the system from defaults. 4. Intraday vs carry forward, intraday trades may need less margin, brokers allow 3x-5x exposure. Overnight trades require full margin. 5. Daily mark-to-market, MTM, profits and losses are settled daily. If losses eat into margin, broker will demand a top-up. NSE example, Nifty futures margin per lot approximately equals 1 rupee 0.6 to 1.8 lakh. Nifty falls 2% in one session, right pointing arrow, loss tilde rupee 30,000. Trader without buffer faces margin call. Reliance example, trader buys Reliance futures worth 1 million rupees. Margin posted equals 150,000 rupees. Stock falls 5% equals loss 50,000 rupees. Equity left equals 100,000 rupees. Maintenance margin not met, right pointing arrow forced square off. SEBI data, a large share of retail losses happen because positions get closed by brokers due to margin shortfalls, often at the worst possible price. Why do traders misuse or ignore margin rules? 1. Greed, wanting bigger positions than capital allows. 2. Overconfidence, believing margin calls won't happen to me. 3. Ignorance, not knowing the difference between initial and maintenance margin. 4. False comfort from brokers, believing my broker allows high leverage, so I am safe. 5. Relying on auto square off, thinking broker will protect them, but forgetting forced exits are rarely at good prices. 6. Chasing losses, using more margin after losing, hoping to recover quickly. 7. Lack of buffer mindset, treating margin as maximum to deploy, not minimum safety. Margin is like oxygen. If you don't have enough, you cannot breathe in the market. Ravi and Bank Nifty futures. Ravi entered Bank Nifty with exact margin. Market fell 2%. Loss equals 40,000 rupees. Margin dropped below requirement. Broker squared him off at loss. Ravi was shocked. He thought broker would wait. Mira and Nifty futures. Mira always kept 25% extra buffer. When Nifty moved 2% against her, she still had margin above requirement. She stayed in trade and recovered the next week. Arjun and Infosys futures. Arjun ignored SMS margin calls. Broker auto closed his position at day's low. He lost more than his planned stop loss. Kavitar and Reliance futures. Kavitar put Reliance futures with both a stop loss and margin buffer. Even when stock fell 3%, she had margin to survive and stay calm. ICICI Bank futures. Example, two traders, Samir and Ritu, took ICICI Bank futures at 1000 rupees. Samir kept only exact margin. Ritu kept 30% buffer. When stock fell 4%, Samir got squared off. Ritu survived and recovered later. Nifty intraday trader. A trader bought Nifty intraday using 5x leverage. He lost 1.5% on price equals 7.5% on equity. Luckily, he had extra funds in account. Margin buffer saved him from forced exit. Stories prove, margin itself is not dangerous. Ignoring margin discipline is. Golden rule 1: never trade at exact margin. Keep at least 20 to 30% more than required. This prevents panic calls. Golden rule 2: margin is a loan, not income. Treat margin like borrowed power. Use it cautiously, not like free money. Golden rule 3: buffer equals peace of mind, bigger buffer equals less stress. You can think clearly and follow plan. Practical checklist before entering trade. 1. Check margin requirement using broker's margin calculator. 2. Ensure you have 25 to 30% extra cash buffer. 3. Confirm your stop loss fits within capital risk limits. 4. Plan for worst case. If position falls 5%, can I still hold? 5. Set alerts for margin balance daily. Step-by-step margin discipline. Step 1. Fund your account above requirement. Step 2. Monitor MTM daily. Step 3. Add funds quickly if margin dips. Step 4. If unable, exit position voluntarily. Step 5. Never wait for broker's forced exit. Margin is not free money. It is borrowed power, with strings attached. If you respect it, margin helps you trade larger and smarter. If you ignore it, margin will push you out of the game. Reflection. Think of one trade where margin call surprised you. What buffer would have saved you? Action. From now, for every Reliance, Infosys, Nifty, or Bank Nifty trade, keep 25 to 30% buffer above required margin. Final analogy, margin is like renting a house. If you pay rent on time, you live peacefully. If you default, landlord throws you out. In trading too, margin is the rent for your borrowed power. Respect it, and it will let you stay.
You've just completed another lesson of Bounce Back Trader. Remember, trade with discipline, not emotion. Subscribe to the channel, share your thoughts in the comments, and continue your journey in the next video. Let's change that 93% story.